In this video, we're going to take a look at what I call a margin analysis. It's pretty basic. It's an informational piece only. It's a summary of the gross margins for your products or services. So if we want to understand what is a gross margin, let's go through some definitions. The price is what you list as your sales price for each item. The same is true. This is for you under the income tab for sales commissions and cost of goods sold. So whatever you put for sales commissions and cost of goods sold, that's carried across. The direct costs come from the cost analyzer tab. So these are your direct costs, meaning the additional costs to produce your labor inputs for all of your products and your services based on how many hours it takes for each of your resources to build the products, to produce the products, to manufacture, create, cook, bake, whatever your products are, or to deliver your services. So those are all your direct costs. So your what's left is your net revenue, and this is how you factor your gross margin. Net revenue is what you use to cover your business overhead, advertising, rent, your utilities, and all of your other costs, marketing costs and such. Your gross margin is simply your net revenue divided by your price. So that's your margin. Pretty straightforward. So this lets you just see at a glance. It's really just for information. It doesn't carry across in anything. It just lets you look to say what's our profit margin. And why do we put this here? Because in some lenders and business partners you might be looking at, investors, they may want to know what your gross margin is. A lot of times, if you ever watch Shark Tank, you'll see where some of those sharks are quickly calculating gross margin. And so it is an important number. So at least for all of your products and services, you can kind of get a quick look at what your gross margin is.